It's been a tough day. It's been a tough day in the markets, reeling from a whole host of factors. It's the biggest intraday fall in several months. The Nifty down over 550 points. This is a market which is flailing to find support. Remember, it's expiry day. That's adding to the woes. There are geopolitical factors which are looking like they're worsening. The Nifty struggling to stay above the 25,200 mark at this point. The Sensex also down about nearly 1,800 points at this level, and the Bank Nifty down 2.5%. I just want to pull up sectoral indices for a second before I get to the heat map and, expect all red on the heat map. Only the VIX is in the green. 14% up. This is showing the fear in the market. This is a market where the fear factor has now taken over. Suffice to say, Nifty reality down 4.5%. Worst hit at this point. Nifty auto down nearly 3%. What is okay relatively, and really emphasizing on the word relative, is Nifty metal, which is down about over 0.5%, but relatively not looking as bad as the deepest hit in the market. Let's pull up the heat map and just give you a sense of the tough sight that you are going to be seeing. There's still some green there thanks to a couple of metal stocks, and ONGC just hanging on because high crude price is good for ONGC, but to what extent? A JSW Steel leading the pack less than 2% up. But here is where the pain point is. It's not just an Eicher, Maruti, Tata Motors, all the auto pack, of course, but a BPCL. High crude prices, bad move for BPCL. L&T, it's indicating the concerns about what happens to the economy when an L&T moves down over a 4%. A Maruti cut about 4% as well. Look at some of your banks. Axis Bank, nearly 4% down. Asian Paints, RIL, all your oil impact stocks, one way or the other, getting hit fairly hard. Nifty contributors, I'll just pull up Nifty contributors and advanced decline ratio before we come to what's happening in the broader market. In Nifty contributors, RIL and HDFC, between both of them, really pulling down the markets. I mean, add an Infosys there. So your three heavyweights are bearing down on the sentiment that we've been seeing. Now, what is really happening in the markets? And let me just quickly take you through that and put that all together. The biggest reason, of course, is geopolitical. The Iran-Israel conflict looks like it's going to escalate. That's impacting crude prices. High crude prices bad for India, but really, the idea that we do not know how far this can go is really spooking markets. The SEBI FNO action, I would put at number 2. That, to some extent as well, is added to the volatility, added to the fear factor to some extent, and has had a bearish sentiment. But number 3, let me come to the third point on why you're seeing this kind of an activity, and that really to some extent is concerns on the economy. GST collections came in at the slowest in 40 months. So are you going to see a pickup in festive season or not? Couple the GST numbers with what we saw with auto sales numbers in September, and some of those concerns are coming back to the fore. Number 4, and I don't think we should really ignore this, is will we see flows to China increasing at the cost of India? Remember, when China was down in the dumps, a lot of those flows were coming into India. China is acting very aggressively to make their markets more attractive. Do foreign flows then move to China at the cost of India is a concern. FI data for India has not been too promising. And then, of course, like I said, below par September auto sales adding to that picture. Let's pull up advanced decline ratio very quickly, just to show you how bearish the breadth of the market is today. And look at that. It's one way. It's one way, and it is looking fairly tough. Nearly 3x advances to decline right now, and declines way up there. Broader markets not looking too pretty either, and Harsh coming in for the top stocks. I don't know, Harsh, if you have anything green on your radar today, but on the broader end of the market also, the pain is looking pretty bad. This is duck for cover kind of a day on the street.
Absolutely. Specific names, of course, which are buzzing, but far and few to be able to pull out.
You had to really hunt.
Yes, I had to really go hunting. So, but we managed to do that. Something like an ITD cementation, new contract, multi-storied commercial building, 2,000 odd crore in terms of contract value. The stock is up 17% on a day like this. Petronet LNG, the company has sanctioned or rather commissioned 2 storage tanks, and on the back of that, stock is up 5.5%. Jubilant Ingravia, we flagged this in the morning as well. Subsidiary partners with major agrochem company for agro intermediate, and that stock is up 4.5% higher. Transformers and rectifiers midway through the day today got orders worth 565 crore from Power Grid, 3% higher. Ashoka Buildcon as well, similar, 1264 crore order win, that one also up nearly 2.5%. Exchanges, well, who would have seen this one? 4% up on BSE, 4.5 almost on plus, in fact, on Angel One. Those two are up and away in trade. SEBI regulations, it seems, have been taken more favorably, given that the draft was a little more adverse. It seems that has had a positive impact on both of those. Dabur has had a soft quarter. We've had quarterly updates come through. Dabur has had a soft quarter, so has South Indian Bank. Dabur down 6.7%. South Indian Bank, 0.5% is okay on a day like this, but 6% plus down on Dabur, certainly a concern.
The concerns are varied and many as far as various sectors are going, but